Okay, let's look at kit questions on this section. Remember, previously it was called section B, but now it is section C because of another section added in the beginning, section A. Now this is section C. So I will try to answer as many questions as possible, but obviously not all questions. Okay, let's start. A decision tree is a way of representing decision choices in form of diagram. It is usually usual for decision tree to include probabilities of different outcomes. The following statements have been made about decision trees. Each possible outcome from a decision is given expected value. Each possible outcome is shown as branch on decision tree. The first one, each possible outcome from a decision is given expected value. Remember, expected value means average of all values. So this is not true. Each outcome is given a value, not expected value. Expected value would be when you combine the values of all outcomes, when you find that average value, and that is given for a decision, not for outcome. For outcome, a value is given, and when we combine that, it becomes expected value for a decision. So the first one is wrong. Each possible outcome is shown as a branch on a decision tree. Yes, each outcome is represented with a line or a branch. So the second one is true here. Okay, match the products to the order in which they should be manufactured to ensure profit is maximized. Business produces 3 products, Z1, Z2, 3. Each of the products require different amounts of material X, which is scarce resource. The following budget data relates to the 3 products. Okay, we have price, material, labor, variable overheads, fixed overheads, profit per unit. Measure the products to the order in which they should be manufactured to ensure profit is maximized. Remember, there was a question like this which I answered previously, and there was a student who asked, in throughput accounting, we don't minus labor costs. Remember, when it is not told that it is throughput, you shouldn't assume it is throughput, okay? So when it is not told it is throughput, it means it is conventional accounting. It means that labor and variable overheads, everything needs to be deducted. If it is specifically told that it is throughput accounting, or we need to find throughput, then in that case we will only minus the material cost. So if it is throughput, it will be specifically told. If it is not specifically told, it is not throughput accounting. Okay, so remember, we rank product based on the contribution per limiting factor, not just contribution per unit, but contribution per limiting factor. Okay, so the first product is 200, or I believe the easiest thing to do is to take profit, add back the fixed cost, it will give you contribution. Always faster way of doing it. So for product Z1, it would be 40 plus 30, 70. For Z2, it would be 35 plus 25. And Z3 is 30 plus 20. Remember, the reason I added fixed cost to the profit is because contribution is profit before deducting fixed costs. So if we take profit and we add back the fixed cost, it will give us contribution. So now this is contribution per unit, but we are looking at contribution per limiting factor. And limiting factor here is material X. So what you can do is, price per kg is given. You can find how much kgs each of them use and then rank them. But if you are answering multiple choice question, you just take the 70 and divide directly by the cost. You don't have to find kgs. The ranking that it will give you is going to be the same as if you found per usage, kg usages. So there shouldn't be any problem. So the ranking that it gives me See, this one would be first, this one would be second, and this one would be third. Obviously, this is not right data. It doesn't tell me how much contribution is earned per kg, but the ranking is right. And in multiple choice question, I only need ranking. So if I answer this question the right way, then I would find kgs, which is the cost divided by kgs per price per kg. So now if I take the cost, 70 divided by 7 kgs, 60 divided by 15, and then 50 divided by 2. See, the ranking is still the same. Now this is accurate data. It tells us how much is the contribution per kg. But if I was answering a multiple choice question, I wouldn't bother finding per kg. I could directly divide it by the cost, because the higher the cost, the higher would be the usage. So the ranking would be first Z3, second Z2, and third Z1, because it gives us the highest contribution per limiting factor. Okay, the following statements have been made about cost plus pricing. This relates to target costing. I believe you've already done it, so I will skip it. What profit markup would HCO need to add to the marginal cost to allow HCO to break even? HCO uses marginal costing plus pricing system to determine the selling price for one of its products. So marginal cost means the variable cost of the product plus adding a profit. Remember, cost plus pricing means finding the cost and adding profit. It could be full cost plus pricing, which means adding the fixed costs as well. It could be marginal cost plus pricing. It could be relevant or standard cost plus pricing and relevant cost plus pricing. So this company is using marginal cost plus pricing. Product X has the following costs. We have direct material, labor, variable overheads, fixed overheads is 40 per unit. Fixed overheads are 20,000 for the year, and we need total fixed cost to find break even. Budgeted output and sales for the year are 500 units, and this should be sufficient for product X to break even. Okay, so this is our budgeted units, but it didn't ask. Remember, they are not asking break-even point. They're asking how much profit we should charge to break even. And remember, the profit should be enough, which means contribution here. It should be enough to cover the fixed cost. So if we are selling 500 units, so we need to earn enough profit so that fixed costs can be covered. That means if I take 20,000 divided by 500 units, which is the budgeted units that we are making, we should be making 40 profit per unit. If 500 are our budgeted units, we have fixed cost of 20,000 dividing by 500, that should be 40 profit per unit. If our current cost is 12 plus 5 plus 3, it is 20. Remember, we are using marginal cost plus pricing. If we were using full cost plus pricing, then we would have added this to the cost as well. But because we are using marginal cost plus pricing, this would be our cost. So our profit added would be 40. Dividing by the cost, it would become 200% if I multiply it by 100. So our profit margin, according to the marginal costing, if we're using marginal cost plus pricing, should be 200%. Okay, what is log cause margin of safety to nearest whole percentage? The standard costs and revenues of log cost only product are as follows. Price, material, labor, overheads, fixed cost. Fixed overheads are absorbed on budgeted production and sales of 10,000 units. Remember, we always need fixed cost in total. Sales staff receive a sales commission of 5% of sales revenue. So what is log cost margin of safety? Remember, to find margin of safety, first we have to find budgeted units. Break-even units. So if our fixed cost is 15 per unit and we have budgeted units of 10,000, fixed cost is based on this, it means 150,000 is fixed cost. If 150,000 is fixed cost, divide by contribution per unit. Remember, profit plus fixed cost should give us contribution, which is 15 plus 15 becomes 30. Let me make this a little bit bigger. Okay, dividing by 30 becomes 5,000 break-even point. Okay, and our budgeted contribution is, our budgeted sales is 10,000. But remember, there is 5% sales commission as well given, which was not included in this one. So 60 multiplied by 5% of the sales revenue is 3. It means our contribution becomes 27. It means 5,555 units. If our budgeted units are 10,000, 5,555 units minus, let's make it 56, would be 4,400 margin of safety. Now taking that, dividing by the budgeted units, multiplying by 100 will give us 44.44%. So I would assume 4 is C is correct. Okay, what is the relevant cost per hour for labor and variable overheads which should be included in cost of the product? A company is making product P which with the following cost curve with selling price, material, variable overheads. Each unit of P takes 1 hour to make, and available labor and machinery are fully used in its current production of P. So there is no spare capacity. The company is considering making a new product Q, but would have to divert labor and machine use from P. What is the relevant total cost per hour for labor and variable overheads which should be included in cost of product Q? Okay, so our current in our current system we are charging 30, which is the normal price we are charging. Labor and overheads, what is the relevant cost per hour for labor and overheads which should be included? Okay, total combined. So we have labor 30 and variable overheads 20. And it's not told whether it is per hour or not. But let's see. Remember, we are diverting. We are currently using product P. Means full capacity. If we go to product Q, it means we will not be making product P. So the contribution foregone from product P should be added to the cost. So the contribution is 15 profit plus the fixed cost, which is 25. So this becomes relevant cost for labor and overheads, and then 50 plus 25 becomes 75. So remember, when we don't have spare capacity, we charge the contribution foregone as well. If we have spare capacity for labor, then there would be no relevant cost if they're idle. For material, the relevant cost would be, remember we studied that in relevant costing, there is a whole possible outcomes. So if you forgot it, go back to short-term decision making and go to the relevant section there. So now in this case, we charge the labor and overheads as well, because they are at full capacity and because we are diverting from other job, we would charge the contribution from that job as well, which would be sales minus variable cost, or simply take the profit plus the fixed cost. Okay, what is break-even point in sales revenue to nearest to 1,000? A company has fixed costs of 1.3 million. Variable costs are 55% of sales up to a sales level of 1.5 million. But at higher volumes of production and sales, variable costs for incremental production units fall to 52% of sales. So what is the break-even point in sales revenue? Okay, so the problem here is that our variable cost at some point is 55%, which means if we minus from 100%, we have 45% contribution margin. This is like CS ratio, contribution to sales ratio. If variable cost is 55, then contribution should be 45. And when sales increase a certain limit, then variable costs fall to 52%, which means our contribution increases. 48% CS ratio. Now, in question like this, first look at the fixed cost and see whether, remember, after 1.5 million sales, the contribution increases. So first we will see whether our break-even point happens before 1.5 million or not. If it happens before 1.5 million, then it's okay. Let's see. If 1.5 million divided by 0.45, it becomes 3.3 million sales. So that means that our break-even point doesn't happen at fixed cost. So it means our break-even point doesn't happen at 1.5 million sales. At current contribution, it should be 2.8 million sales. But remember, after 1.8 million sales, the contribution changes. So what we do is we will answer this in two parts. The first part is we take 1.5 million sales and multiply by the contribution that we are earning at this is 0.675, and total fixed cost is 1.3 million. So we need 0.625 extra sales. So 0.625. Now the contribution after 1.5 million sales is 48%. So divide by 0.48 becomes 1.3. So 1.3 extra after 1.5. So 1.5 plus 1.3021 becomes 2.82 something. That means D would be correct. Okay, so what I did, because at 1.5 million, I saw that break-even point could not be achieved. I found the contribution that I'm earning here. I'm minusing that from the fixed cost, and then I'm finding how much extra sales I need to cover the remaining fixed cost, which becomes 1.3, added with the 1.5 becomes 2.81. Okay, a benefit sacrificed by taking one course of action instead of most profitable alternative course of action is known as which of the following? Remember, when you are choosing one thing over another thing, that is called opportunity. So I thought I will answer a few questions, but every question seems to be important. So I will see if a question is repetitive, I will not answer it. Otherwise, if they are important, every question, if it has a new point, I must answer it. Okay, continuing. For each 10,000 kg input to the common process, how much additional profit is obtained by further processing each of the joint products instead of selling them at split-off point? Okay, a company manufactures two joint products, CP1 and CP2. In a common process, these products can be sold at a split-off point in an external market or processed further in separate processes to produce product FP1 and FP2. Details of these processes are shown below. We have the input, we have the further processing, and then the cost of further processing, the kgs made, the loss made. CP1 has a market price of 6 per kg, and CP2 has a market price of 5 per kg. Relevant further processing costs are 2 per input kg in the process to make FP1 and 3 per input kg in the process to make FP2. Both FP1 and FP2 sell for 9 per kg. For each 10,000 kg input to the common process, how much additional profit is obtained by further processing each of the joint products instead of selling them at split-off point? Okay, remember, this is further processing decision. When we are looking at further processing decision, we ignore the cost that we are incurring here. We only focus here. So the requirement is for each 10,000 kgs input into the common process, how much additional profit is obtained by further processing each of the joint products instead of selling them at split-off point. Okay, they're saying we want to further process it, both of them. If we further process it, how much additional profit are we earning? So they're not asking us whether we need to further process or not. They're asking us what is the benefit of it. Okay, so 10,000 kg is input, 5% is lost. That's why 5,500 is here, 4,000 is here. Remember, this loss is not relevant. Then when we further process, there is 10% loss. And when we further process there is 5% loss. So for further processing decision, we are looking at the incremental benefit that we are earning and the cost that we are incurring. So here we are for the incremental benefit, we just look at the cost, the price without further processing, and the price after further processing, and the additional cost of further processing. Usually we don't look at this cost because they are not relevant. Okay, current market price is 6 per kg for CP2, which is this one. Okay, CP1 has 6 and CP2 has 5. So if we sell it now, I will do both of them together because they didn't ask separately. So 5,500 multiplied by 6 plus 4,000 multiplied by 5. This is the current revenue that we can earn, which is 53,000. If we further process it, we will be able to sell it. I will ignore the cost for now. Both FP1 and FP2 can be sold for 5. Okay, for 9. So we have revenue, same thing, but there is a loss of 10% here, so multiply by 90% multiplied by 9. and there's 5% loss here, so multiply by 95%, multiply by 9. So this is the revenue that we are earning. But remember, this is not the incremental revenue. Incremental revenue is when I take 78,750 minus 53,000, because we are earning 53,000 anyway, whether we further process or not. Now we are looking at the cost of further processing. Obviously, the revenue is more when we further process, but what is the cost that we are incurring? Relevant further processing costs are 2 per input kg. Remember, per input kg, not per output kg. In process P, 3 per FP1, 3 per input kg. So this will require, okay, this is 2 for FP1 and 3 for FP2. So the relevant cost is 2 here, 2 and 3 here. Incremental cost that we are incurring is 23,000. So 25,750 minus 23,000 becomes 2,750. This is the incremental benefit of further processing, which is A. Okay, using the expected values, which choice should be made so as to optimize the expected benefit? Okay, so remember, tree is made from left to right, but decisions are made from right to left. So the expected value of this decision is 950 because there's only one outcome. Let's look at the expected values of others. We have 0.30 multiplied by 14,000 plus 0.30 multiplied by 10,000 plus 0.40 multiplied by 5,000. This is the expected value. So this is lower than the first one. So if we are comparing 1 and 2, 1 will be good. Now let's look at the others. 0.40 multiplied by 10,000. 0.60 multiplied by 9,000. 9,400. This is also lower than the first one. And let's look at the fourth one. 0.70 multiplied by 8,000. 0.30 multiplied by 14,000 becomes 9,800. So this gives us the highest return. So choice 4 would give us the highest. So our decision would be choice 4. Okay, analyzing the range of different possible outcomes from a particular situation with a computer model that uses random number is known as which of the following: probability analysis, sensitivity analysis, simulation model, stress testing. Remember, simulation model, I told you when I worked on it in risk and uncertainty chapter, I told you the numbers are generated by computer. Which of the following statements about graphical linear programming with objective of maximizing profit is true? So this relates to linear programming. If a resource constraint does not pass through the optimum point on the graph, then ensure a price of that resource is 0. So what it simply means is that in our line of best, in our optimal point, if a resource is not in that optimal point, then share of price of that is going to be 0. Yes, because remember, share of price means what is the extra contribution we are earning from one extra resource. If that resource is already more than we need at optimal point, there would be no point in purchasing additional. So this is true. So there is no, the share of price of a resource that does not pass through that point would be 0. The share price is the maximum amount a company should pay for one more unit of a scarce resource. No, it is not the maximum we pay. It is the maximum contribution that we are earning from that. So the maximum we pay would be the price plus the contribution. Obviously, if there is no profit, no loss situation. But it is not the maximum we pay. It is the maximum contribution that we are earning. And remember, when we find that contribution, we have already considered the cost of that resource in it. If you go back to the shadow price, when we find the optimal point, we use the contribution, and in that contribution, the cost is already considered. The slope or gradient of objective function depends on the amount of resources available to the organization. The slope or gradient of objective function depends on the amount of resources available to the organization. I actually don't understand this. So usually, when you don't understand something, usually it is not correct. Okay. Remember, when something is wrong, it is difficult to understand, so don't focus on it. If the objective of a company is to maximize total contribution and profit in each period, how much should the company be willing to pay per hour to obtain additional direct labor hour of production capacity? So I believe this is shadow pricing. A company uses linear programming to decide on the production and the sales budget that will maximize total contribution and profit for financial period. The optimal solution involves using all available direct labor hours, for which the shadow price is 4.5 per hour, and machine hours, for which the shadow price is 3 per machine hour. Direct labor is paid 8 per hour. If the objective of the company is to maximize total contribution and profit in each period, how much should the company be willing to pay per hour to obtain additional direct labor hour of production capacity? Remember, how much you are willing to pay is the maximum. The maximum is the contribution plus the cost. So contribution is 4.5, the extra contribution, the shadow price, and the cost. So which would be 8 plus 4.5, 12.5, which would be C here. Okay, remember, shadow price is the extra contribution we are earning from one extra resource. So the contribution plus the cost. But you are saying, but you might be thinking add is more than the 4.5 we are earning. But in that 4.5 contribution, add is already included. Okay, which two pieces of information are required when deciding purely on financial grounds whether or not to process a joint product further? Remember, for joint products further processing, we have financial consideration as well, non-financial consideration as well. Non-financial consideration would be, for example, the effect on customer of further processing. The financial consideration, we just look at the extra cost versus extra benefit. So which of the following are important on financial ground if we are making decision on financial ground? The final sales value of the joint product, further processing cost of the joint product, value of the common process, the method of apportioning common cost between joint products. Remember, I told you the common cost are the costs that are incurred before the split off point, this one, and they are not relevant, so we don't look at them. Whether they are common cost or how they are apportioned, they are not relevant. We only look at the sales and the cost of further processing. So A and B would be correct here. Okay, what is the shadow price per labor hour? And for how many additional hours of labor does the shadow price per hour apply? A company makes two products, X and Y, using the same type of labor. Production capacity per hour a period is restricted to 60,000 direct labor hours. The contribution per unit is 8 for product X and 6 for product Y. The following constraints apply to production and sales. We have X equal to or less than 10,000 demand, which is maximum, and Y equals 12,000 or less, which is the maximum demand. And direct labor is 5x plus 4y equals 60,000. The contribution maximizing output is to produce and sell 10,000 units of X, which is the maximum unit of X, and 2,400 units of Y. Remember, they're not maximum yet. So if there is a share of price for additional labor hour, the only increase will be in product Y. Product X would stay the same because it is maximum utilized. So there will be only additional benefit for every additional unit of Y being manufactured. Okay, so where is contribution given? The contribution per unit is 8 for X and 6 for Y. And Y uses 4. Remember, when you have a question like this, you don't have to make optimal point because the maximum unit is already 10,000. They will not increase anymore. So you just take the contribution of Y, which is 6. Remember, it doesn't work in every type of question. It works in this specific type of question where you have 1 unit up to maximum capacity use. Otherwise, we have to use the equation. So contribution is 6 and it uses 4 hours, so we have 1.5 contribution. So every additional unit of Y per hour gives us 1.5 contribution. So that is the share of prices. Simple as that. And remember, for how many hours that will apply? Our current is 2,500, the current optimal point, and the maximum it can go is up to 12,500. So 9,500 units. 9,500 units would require how many hours? Multiplied by hours per unit is 38,000 hours. It would go up to 38,000 hours, because after that the limit would be exceeded and there will be no benefit in doing extra.